Good afternoon. This is Rich Nelson with Allendale, covering the commodity comments here. This is Wednesday, June 15th of 2011. Of course, before we even talk about grains, let's just talk about the general commodity-wide sell-off that happened today. On my screen, at least for my computer, I've got 21 of 27 markets on my screen showing solid losses here today. Of course, the key reason why are Greece debt concerns. So we're actually back to this story, which has kind of played off and on throughout the past year and a half or so. As far as Greece goes, a 24-hour strike was called as of yesterday, meaning last night. 20,000 protesters attempting to storm Parliament in order to certainly protest all the austerity measures that are going on with Greece itself. They've actually called 5,000 police to help kind of quell this more or less minor uprising here. So bottom line today is all Greece concerns. We're not certainly feeling that it's not in any way any major corn or soybean based concerns. So we've got that issue here sitting in front of us here. Crude down about $4.22 and continuing to fall here in the last few trades. A minor issue here also, the government CPI report showed overall inflation up about 3.6%, and of that, food inflation up about 3.5%. Actually, kind of surprising the fact that food is not leading the way in overall higher prices there on this end, certainly on the energies as far as for the push up here. So overall, let's keep in mind here, today was not a corn or soybean or wheat-based sell-off. This was a commodity-wide sell-off related back to that old story again, Greece concerns here. As far as corn goes, down 29.75 on the July, down 18.5 on the last trades, at least for December contract. We can point out that weather is still generally still a bearish issue right now here. The fact that weather has improved dramatically in the past 3 weeks, and the forecasts show pretty much we're getting maybe 3 days of rain, 3 days of sunshine, 3 days of rain, and 3 days of sunshine here. So still weather is a slightly bearish issue, but in no way, shape, or form do we think this is the size of the decline is related to weather here. As far as ethanol, we can of course feel happy about the Senate's decision yesterday afternoon not to end the debate on ethanol, and therefore they basically said, you know what, we're not going to go ahead and lift these subsidies immediately here. So that's certainly good news on this end. Beans actually did a great job today, up 2.5 cents, resisting much of the sell pressure. Wheat down 21.75, so certainly had some pressure there. So overall, major losses in almost all commodities here today. Cattle down 35 cents. Cattle was actually much higher here this morning, showing a lot of green on the screen, but it was able to fail. Traders are hoping to get maybe one more week of higher cash cattle trade. They're a little disappointed, though. While cattle feeders are asking 107 for cash cattle, compared to 105 last week, Packers actually sitting right there with 103 bids. That could imply only steady trade at 105 this week. That would be a disappointment here. Also a little disappointing, the midday box beef was down 20 cents for select and down 36 cents for select. Down 20 cents for select and 36 cents for choice. All right. One more time here, down 20 cents for choice, down 36 cents here for select. So overall, as far as cattle, maybe a little disappointing compared to what people were expecting earlier on this morning. We can point out cattle and feed will be out Friday afternoon. Look for higher marketings, but lower placements. That should be a little bearish on the nearby summer contracts, and of course a little supportive for the December and February contracts. Overall, the hogs up 85 cents today. This continues this strong trade here in the past few days. The simple fact is seasonally, this hog market to post some gains here for about the next 2 weeks here or so. So we should see some continued gains on this end for cash hogs, cash pork, and also futures here. So overall, a very exciting day, very tough day psychologically for producers to sit back and see some potential margins declining here. But as we said before, the simple fact is today is not a corn, soybean, or wheat-based sell-off. Today is a commodity-wide, quote-unquote, risk-off sell-off. Now, compared to previous corrections, we could see by another 2 days of selling. Based on the last 5 major corrections in corn, the minimum decline was 5 days total. So we can certainly expect some selling throughout this week, so be prepared for that psychologically. If you have any questions about markets, marketing, or anything else in general, feel free to give us a call here at Allendale, 1-800-262-7538. Thank you.